Is life insurance really worth it? What kind should you get? Can it be considered an investment? In today's video, I'll be answering all of this and more. Let's go. Hey everybody, hope you're all having an amazing day. My name is Arjun and welcome back to the channel. So over the last couple of weeks, I've gotten a few questions about life insurance and my thoughts around them. Recently, one of my friends also nearly got scammed into a very bad life insurance policy. So today, I thought I'd make this video telling you all you need to know about it so that you can play the old reverse card straight back at them if you're ever in this situation. I'll be talking about what life insurance is, whether you need it or not, how effective the insurance from your job is, and then finally I'll compare the different types of life insurance out there and tell you what the best one is in my opinion. Again, all of these are my thoughts and my thoughts only. None of it should be taken as professional advice. Cool? Cool. Alright, so the main purpose of life insurance is to provide for your dependents in the event of your death. So dependents in this case would be your spouse or your children, and they can use this money for everyday bills, paying off a mortgage, or basically whatever they want to. You pay a premium to the insurance company, and based on the type of policy that you get, this can be either for a fixed term or for your whole life. Do you need life insurance? This question is actually quite easy to answer. If you have dependents who rely on your income to survive, then probably yes. Otherwise, not really. So if you're just out of college living in your swanky bachelor pad, then no, you don't need it. If you're married and your spouse works and you have no kids, then again, you probably don't need it. But if only one of you works and you have a child or children that rely on this one income, then yes, it definitely does make sense to get life insurance, mainly for a peace of mind and also for a good safety net. If you think life insurance is good for you, then the next logical question is, how big of a policy should you take out, right? So I think this will vary from person to person, but if you want a general rule of thumb, it's around 10 to 12 times your annual salary. So if you make around $75,000 a year, that would be a policy of around $750,000 to $900,000 if I did the math correctly. Some of you might have life insurance that's provided by your employer. This is not a terrible option because it's subsidized and generally doesn't cost you too much, but it does suffer from one major problem: portability. What I mean by that is that this insurance policy is tied to your current job and it doesn't follow you around wherever you go. Let's say you're a healthy 35-year-old with a spouse and a child who has a good life insurance policy from work. That's great. In case something happens to you, they'll be set. But now let's say 10 years later, you move to a new employer who does not have life insurance or has a very bad policy. On top of that, you're unfortunately also diagnosed with cancer at the same time. You look around for a 10-year policy, but it's just crazy expensive. In fact, you pay more in total right now for a 10-year policy than a 20-year policy that you could have taken out when you were 35 years old. So all of this just goes to say that it still makes sense to take out your own life insurance policy rather than relying solely on the insurance that you get through your employer. Moving on to the types of insurance available, there are two major types. You have term insurance and whole life insurance. One of these is a lot better than the other, and this is actually the complete opposite advice that you'd get from most insurance agents. As you watch the rest of the video, you'll understand exactly why. Term policies are those where you are covered for a set period of time. This is usually 10, 20, or 30 years. To keep your policy active, as usual, you pay a monthly premium to the insurance company. In case something happens to you during that time and you pass away, then your beneficiary gets the death benefit or the payout. If nothing happens to you during that time, then it holds zero value, kind of like car insurance. Because of this, it's quite easy on the pocket. Premiums cost you only around $20 to $40 per month for a 30-year-old adult. Whole life insurance, on the other hand, is permanent, meaning it covers you for your entire life. Since the term is your entire life, that means that your beneficiary is guaranteed the death benefit when you pass away. But that also means that you have to pay your monthly premiums for as long as you live. And these premiums don't come cheap. Since everyone is guaranteed a payout, you're looking at costs of around 10 to 15 times that of a term life policy. To try and sweeten the pot a little bit, they have an investment component that's called the cash value. This is essentially a portion of the premium that the insurance company invests on their own, and then they return a portion of their profits back into your account. Generally, this is riddled with fees and you get quite low rate of return. There are some positives to this, however. The money inside the cash value account grows tax deferred, and you can also take out a loan against it if you want to. You can also cancel the whole life policy at any time and you get back a portion of the cash value. Whereas in comparison, in a term life policy, when you cancel, any money that you paid in premiums all goes away and you get back zilch. Let's do a comparison using actual numbers to see which one is better. Assume that there's a 30-year-old woman who's looking for a life insurance policy with $500,000 in coverage. She has two options. The first is a whole life policy that costs $380 per month. Initially, money goes towards fees and commissions, and then it starts going into the cash value investment account I spoke about earlier. Since the insurance company is doing all of the management, they take a big cut out of it. You can expect only about 2 to 3% returns from this. So if you take an average of 2.5% return, then you're left with around $205,000 after 30 years. Now, the second option is a term life policy which costs only $30 per month. So she pays the $30 to take care of her insurance needs, but she also invests the difference, which is $350, into an S&P 500 index fund on her own. Taking an average of around 8%, which is a conservative return percentage from the last few decades, that leaves her with $513,000 after 30 years, more than double of what she had from the whole life policy. Here's the kicker with the cash value portion of the whole life policy. Your dependents never get to see that money. So if you happen to pass away after saving up $200,000 in it, your dependents still only get the $500,000 death benefit, and the cash value portion goes straight into the pockets of the insurance company. The only time when a whole life policy makes sense is for families who have a child who needs a lifetime of support, or for those who have estates that are worth more than $5 million and they're looking to save a little bit on taxes. For everybody else, I'm talking like 95, probably 98% of the population, a term life policy is usually the right option. You'll see a lot of financial advisors and agents trying to push whole life policies on you because they make 80 to 100% of the premiums in the first year. For a term life policy, they make only a fraction of that amount. So there's a clear conflict of interest. Anytime you're talking to a financial advisor, just make sure they're what's called a fiduciary, meaning they always have your best interests at heart. As I said earlier, one of my friends nearly got tricked into a bad policy, and I'm sure she would have regretted it in the years to come. So I'm hoping that this video gave you all the information you need to prevent that from happening to yourselves. If you have any questions about anything I spoke about, please drop them in the comment section down below and I'll try my best to get back to you. As always, likes and subscribes are very much appreciated. They signal to the YouTube gods to push this video out to more people so that we can all grow smarter together. With that, thanks again for watching all the way through, and I will see you in the next one. Later.